On Bloomberg BusinessWeek, I'm Carrol Massar.
And I'm Jason Kelly. We're here at Bloomberg headquarters in New York.
This week, Tesla hits $100 billion, speeding past Volkswagen to become the world's second biggest car maker by market value and leaving skeptics behind.
Plus, in remarks, free trade is dead. Long live managed trade, apparently. Why President Trump's trade actions may endure long after he's out of office.
And Jason, we've got a Bloomberg BusinessWeek exclusive. The first look at Porsche's Super Bowl commercial. We speak with North America CEO Klaus Zellmer and the driver behind the wheel of the action-packed ad called The Heist.
All of that still to come, but we begin this week like we often do these days in Washington. A big week for impeachment. Ryan Teague Beckwith joining us from there. A lot of action down in the nation's capital. Ryan, what are we seeing right now? What point of the process are we in?
So essentially, we're finishing up the opening arguments here, both the House impeachment managers and Trump's defense lawyers making their sort of broad overview of the case. The two really talking past each other for most of the week. The House impeachment managers put forward a very detailed look at exactly what happened and how it happened. The defense team for Trump pretty much just arguing this whole process is flawed, that there's no abuse of power. Not really engaging on the particulars of the evidence.
Hey, Ryan, I really do feel like investors have shrugged this off in a big way. Is there anything, though, that investors should take note of the process so far or what's to come?
I don't think that, what investors are worried about is uncertainty, and this is the opposite of that. There's almost no chance that this changes from what we expect it to be. There still is a possibility that there could be more witnesses. It could go on a little longer. I think there's some political consequences that we don't yet know about how this may affect incumbent Republican senators running for re-election, how it may affect some Democrats running for re-election, what effect it has on President Trump's re-election. Those are all still big unknowns. But I think for investors, no, I think they're probably rightly watching a different channel.
Ryan, we love talking to you. You're a seasoned watcher of all of this. I also love following you on Twitter, all your observations about this. Give us a sense of the feel on Capitol Hill and the feel in Washington, because this is unprecedented or lightly precedented. We've only seen this a couple times in the history of the country, and yet outside of Washington, I don't think we have a real appreciation for what it feels like there.
I think normally when you say something is historic, you assume that it's also interesting. And what's weird about this is that this is really a big deal. I mean, it's a huge moment here. And I think that the reverberations from what decisions they make in the coming weeks here will come back to haunt us in one way or another for years to come. But right now, senators seem mostly irritated by having to sit through this. They don't get to talk. Some of them have been spotted leaving, even though they're not supposed to under the rules. Republicans in particular don't seem that engaged in it. Their complaint in recent days has been there's nothing new. Of course, they don't want witnesses or testimony or new documents. So, of course, there's nothing new. But it's really sort of, we're going through the motions here. I think that they're all doing a good job of this. It's just that since everyone knows the outcome, it feels belabored to sit through it.
Ryan, thank you so much. And of course, the process turns into week 2, so we'll continue to follow that as well. Well, from one historic moment to another, we turn now to Tesla. And Kaylee Line, she's got a chart. It's been quite a run this week, really quite a run for a few months now.
For a few months, just in the first few weeks of 2020, the stock is up about 40%, and it has more than doubled since October when it reported that surprise profit. Now, in that time, it has also added about $60 billion to its market cap and has crossed that $100 billion level. And now why this is important, not only does it make it the second largest automaker in terms of market cap, topping Volkswagen, if it can hold at this valuation for 6 months, it will unlock the first level of Elon Musk's pay package, which could net him about $346 million, guys. So really incredible run up here.
Well, and this is such a moment for Elon Musk in many ways. And this pay package that you're talking about, a little bit controversial. Investors and certainly experts around compensation, this has been a wait what moment for them ever since it was announced.
Absolutely. There was some question of, is he ever going to be able to get there? But really, since October, the bulls have taken charge of the stock. That bull-bear battle is really skewing more toward the bullish side. So maybe there's some faith in him once again.
And that sets us up for our next element. Kaylee Lines, thank you so much. Well, Tesla's speedy ride also leaving skeptics and their billions behind.
It's this week's cover story. Here's Dana Hull from San Francisco on selling Musk short.
It's sort of known as Tesla Q, and the Q is added to a company's stock symbol when it files for bankruptcy. Clearly, Tesla has not filed for bankruptcy, but there is a fairly significant group of people who sort of either feel like that's inevitable or they just are not buying what Elon Musk is selling. And, there have always been critics of Tesla on, Yahoo Finance and Seeking Alpha, but kind of over time, the criticism of Tesla migrated to Twitter, and the hashtag TeslaQ really kind of came into vogue over the past couple of years. And with every big news announcement or big news event, like when Elon attempted to take the company private at $4.20 a share, you just saw the TeslaQ hashtag more and more. So it's this sort of fascinating world of people that are very critical of Musk. Some of them are short sellers, some of them are just critics, and it's almost like a filter bubble where, if you just follow the TeslaQ hashtag, you get a completely different view of the company than if you follow Musk and all of his adoring fans.
There's one critic in particular, Dana, that you go into, Randeep Hothi. Tell us about him. Who is he, and how did he come to have such a big war, it seems like, Twitter war with Elon Musk?
Sure. So Randeep Hothi is a really fascinating person. Tesla Q is filled with all kinds of people. And as I was kind of trying to explore this world, I was looking for a character who could kind of explain what this community was all about. And Hothi is an individual whose real claim to fame is that he really dogged Tesla on production at their Fremont factory in 2018. And he would post these photographs of the logistics lot and the finished vehicle lot. And he seemed to really have like a bead on daily production numbers. And everyone was trying to figure out, who is this Skabushka character? Is he a contractor, a supplier, a former employee, a current employee? Like, he seems to be in Fremont every day. Like, who is this person? And as I got to know him, I just found him to be sort of a really intriguing figure. He has shorted Tesla stock, but to be clear, he's not like a major short seller in the way that we think of Jim Chanos or David Einhorn. He's actually a graduate student at the University of Michigan.
And so why is he so passionate about this? Because he spends a lot of time on this, Dana.
Yeah, he certainly did. I mean, I think that he's just sort of he's a very research-based fellow who has been a lifelong student. He got interested in the stock market and capitalism. He grew up in Fremont, not far from where Tesla has its factory. And the more he kind of dug into Tesla's financials, the more alarmed he grew by the pronouncements that the company was making. And because he lives in the Bay Area, he was kind of in a position to do on-the-ground research that is very valuable to a lot of people. So he just started putting his research out, and it all came to a head in April of 2019 when he actually followed a Tesla car that was testing autopilot, tweeted about that, and then Tesla actually went to court to get a restraining order against him.
Why?
Well, Tesla argued that he was, driving dangerously close to their employees, was trying to sort of mess up the demo, that he was a threat. And, they were clearly kind of, they felt, Tesla as a company felt threatened by his research. And they felt like they, needed to sort of do something to keep him away from their employees. This all was coming about right before Tesla was having its big autonomy day for investors as well.
Well, and what's interesting, too, is somewhere, and help me out with the timeline, there was a dossier on Hothi that was released as well. I mean, he's also been kind of feeling a little threatened as well in all of this, right? Yes, targeted.
Yeah, I mean, it's called doxing. So, a lot of people who are on Twitter use, sort of aliases or pseudonyms because there's sort of a history of people who have been critical of Tesla and Musk being doxed. Hothi was doxed as well in July of 2018, and people didn't really notice it at the time. But yeah, someone on Twitter kind of released this dossier that linked him to his graduate school, where his brother worked. I mean, so he was definitely feeling exposed as well.
Coming up, why free trade is dead even after Trump's gone.
And behind Porsche's The Heist Super Bowl ad, the Taycan, which launched Porsche into the era of electric power, well, it's now capturing the attention of new audiences.
This is Bloomberg BusinessWeek.
back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. Join us for Bloomberg BusinessWeek every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by listening to our podcast.
You can also find us online at businessweek.com and through our mobile app, and also watch us daily on YouTube. Well, now to a topic we can't stay away from even if we wanted to. It's trade.
Well, that's right. This week's remarks are on how President Trump's upending of global commerce may endure even long after he's gone.
Here's economics editor Peter Coy on free trade. It's dead. Maybe long-lived managed trade.
Managed trade is where, instead of sort of letting the chips fall where they may, letting private parties work things out for themselves, you sort of dictate terms. So, for example, the voluntary restraint agreement on autos with Japan, that was a form of managed trade. It was quote unquote voluntary. In effect, it was a quota on Japanese imports of cars. We seem to be going through another era of that now, and the U.S.-China deal, the Phase 1 deal that was signed by Trump earlier this month, is an example of that, according to Gary Clyde Huffbauer from the Peterson Institute for International Economics. Recall, the deal has a provision that China will buy $200 billion worth of products from the U.S. over a certain period of time. And there's a secret provision in that agreement, secret, we haven't seen it, that specifies what products and what volumes. So this is not free trade by any means. This is an agreement between two countries where it's just hammered out in a back room, and you can argue it's good or it's bad, but it's clearly not ordinary laissez-faire free trade.
So why are you writing about it, and why is it so significant, you think, that maybe we're pushing back on the era of free trade? And remind us, I mean, free trade was the whole concept, right, of nations doing what they do best, selling that, buying what they needed, and everybody kind of doing the best that they could, and everybody benefits.
Right. That's the ideal Econ 101 version of trade, and it can work, does work in many cases. Now, the argument in favor of managed trade would be, look, China is just not holding up its end of the bargain, and they're not a market economy. So why are we pretending they are a market economy? Let's just knock heads and get a deal done. And that is what the Robert Lighthizer, the U.S. Trade Representative, and Trump seem to have concluded.
Because I feel like it's like, well, sometimes a nation, maybe China, because they don't necessarily play like everybody else on the developed world stage, then maybe they need a little bit of nudging. Maybe they need some quotas to kind of get them on the right. Are they right?
So that is the pro argument. The con argument is that there is harm done here.
Yeah.
And one form of harm is that you end up, China is buying absurd amounts of things it doesn't really need, which of course is not a U.S. concern, but it's just like creating inefficiencies on both sides. The other harm here is that, let's say that U.S., we don't know what the terms of the deal are, but I can imagine there's probably a lot of soybeans in there.
Yeah.
So Canada, Brazil had captured a lot of the soybean market from the U.S. Now the U.S. is kind of capturing it back. Well, more generally speaking, what happens is that the country that is suddenly frozen out of the market because the U.S. is coming in has a legitimate complaint, can go to the World Trade Organization. In fact, the Europeans have already, we had Phil Hogan, he's the the European Union Trade Commissioner in Washington this past week. He said, we haven't read it yet, but we're going to take a close look at this. And if we believe that this is managed trade, which is against the principles of the World Trade Organization, we could bring a complaint.
So one of the lines in your story that I think is really revealing in many ways, and I think will resonate with a lot of our readers, listeners, and viewers, is that managed trade is about cutting deals rather than following rules. And I think anyone who has watched this administration will say, yep, that checks out, right? I mean, this is the whole ethos of the Trump administration in many ways.
And, makes no bones about it. That's what he wants to do. He's doing it. And there are people who would say it's achieving certain objectives.
Up next, the protests in Hong Kong create a retail meltdown.
They also put one of the newest owners in the NBA in a tricky spot between Beijing and Brooklyn.
We've got a look at Nets owner and Alibaba co-founder Joe Tsai.
And later on, Porsche kicking into high gear with an ad for the big game.
This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. You can also listen to Bloomberg BusinessWeek on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area and London on DAB Digital and through the Bloomberg Business app.
And you can watch us daily on YouTube. Just visit youtube.com, search Bloomberg Global News. China's one-week Lunar New Year festivities are underway. Undoubtedly, its most important holiday, traditionally the time for Chinese to travel. This year, very different with the spread of a deadly virus that originated in Wuhan.
It's also typically Hong Kong's biggest shopping season. This week's business section looks at how the ongoing protests, now months long, are impacting retail in the city. Here's editor Jim Ellis.
Well, one of the things that's always marked Hong Kong is that it's been the shopping, or it was the shopping mecca of China and of Asia. But what a lot of people didn't realize was that a big boost for Hong Kong came from the ability of mainland Chinese to sort of go there and do their shopping. It was their mall, basically. And that was great for the last 20 years. The problem is now more and more of the shoppers who need to come to Hong Kong are starting to worry about coming there. I mean, the protests have been very difficult for Hong Kong. Big reason is that a lot of mainlanders feel that that it's dangerous, B, that people who live in Hong Kong are unpatriotic and are very anti-Chinese,
right.
And therefore they're like, why should we go and give our money to these people who don't even want to be part of us?
Well, it is dangerous, right? There's reports of various mainland Chinese being beaten up, right?
There have been press reports, but also the government has been encouraging those press reports, and so it's all
the Hong Kong government.
Yes, it's all part of a way to show that right now Hong Kong is an outlier, and China, the rest of China, is the sort of patriotic type.
Having said that, though, Jim, like some of the numbers, I kept writing on my notes. Wow, statistics in terms of how much retail sales, high-end luxury retail sales, are down in Hong Kong.
Well, one of the reasons is that because mainlanders account for so much of the tourism to Hong Kong, it's 80%. I mean, a lot of people think people from all over the world are coming in there, but 80% of the travelers to Hong Kong are from China. And a lot of them are high-end shoppers who go there to shop at Gucci, go there to shop at LVMH. The problem is that they'll come in and spend a lot of money and then go home. Now, two things have happened. One is lots and lots of retailers are opening up in cities across China. And now you can shop at luxury retailers in Shanghai, in Beijing, in Guangzhou. You don't have to make that trip.
Right.
The second thing is that Hong Kong always benefited from being the air hub that all rich people or business people had to go through to get in and out of China. That's faded. The government owns 3 airlines, and they have set up 3 hubs in other cities across China. And so what happens is that nowadays high-end shoppers don't have to go through there, so there has to be a reason for them to go to Hong Kong, and it might be because there's more restaurants, there's more whatever, and now with the trouble from the protests, they're not even doing that.
Yeah.
So therefore you have these huge drops. I mean, so retail sales have dropped in a single month in November, they dropped by 25%. And in high-end goods like watches and things like that, it's over 50%. Now that's sort of shocking. It's hard to imagine half of your business sort of going away overnight. But that's what's happening there.
Well, and it's leading to stores shutting down. I mean, and not just one here, one there, but dozens of locations for certain stores.
Yeah, well, overall, and this includes high-end and low-end, and a lot of this is sort of low-end stores, but 400 stores closed in Hong Kong in the last 6 months. But then there have been some high-end names. You sort of think that, that cohort will continue to shop, but Louis Vuitton is closing a store, Prada is closing a store. Lots of people are saying that this business may not be coming back simply because even if the protests end, the damage has been done reputationally, and you can shop closer to home, plus you can shop online.
And we turn now to a special strategy section in this issue. It's a fun one.
It is. Here's editor Dimitra Kasanides on peer pressure, how for lonely freelancers, online work clubs could actually help.
We write about these companies. They're kind of like these online work clubs, and you log on and you find a work buddy, and you can either go the Focusmate route, that's one of the companies we write about, which is like 50-minute increments, quick, or you can really commit to like 3.5-hour work sessions with an online buddy.
This is literally like you and I would log in from our home offices and like hang out.
It's pretty simple and straightforward. I mean, basically that's it. There's an idea behind it that a strong motivator is simply the presence of somebody else observing you while you're working, or kind of aware of whether you're working or not. You know, if you're logged on and I'm your buddy on the other side of your computer screen, you know, if you decide to just walk away or stop working on that one, you know, memo you've got to knock off in the next hour, I'll know it. And you know that I'll know it, so maybe you won't get up and walk away from your computer in that next hour, and you'll actually get it done.
And maybe even just like showing up to your desk at 8 a.m.
Exactly, because that other person's going to be there waiting for you.
Does it work?
I mean, you know, for the people that our reporter talked to, they said that it really worked like beautifully. One guy that she interviewed who works remotely has a part-time permanent job but is remote, and also runs his own business. This thing really regimented him. He logs on at 8 a.m., you know, he gets a lot done, he's far more productive, and he ends in the afternoon earlier so that he can then, like, you know, get to other tasks connected to the running of his business.
It sounds like it's not too expensive a month, or it depends.
Right? Yeah, it depends. I mean, there are different price points for the two. You know, so Cave Day is a different format in that you can do it in person. They have spaces in Los Angeles and New York where you can actually show up, but theirs is also one where you can log on, and they're much more bigger commitment, more hours, more intense maybe projects that you need people to help you sort of, you know, again, find that motivation. Right. So it sounds kind of like, wait, is this all it really takes? But in a way, it is all it really takes. I think we're going to see how much these work. They're very new outfits. Yeah. A couple of Focusmate has definitely attracted some funding that they shared with us, $1 million so far. And Cave Day has not revealed how much they've brought in, but I think that we're at the stage where we're going to start to see more interest in companies and outfits like this.
And you guys do a nice job of sort of putting this on a continuum, right? In the sense of like, we had offices, then we kind of dispersed in many ways.
Right. So there are a lot of these clubs now, like The Wing, and there are similar ones where, you know, you're maybe going to bring together a group of like-minded people. The Wing is geared towards women. It does more than just bring you together to work. It does events and talks. And so this is just another sort of evolution in this. We've got so many people out there working on their own, who, whether they need support or ideas or people to brainstorm with or whatever it is, you know, can tap into these.
Up next, the NBA's man in Beijing and Brooklyn. Actually, he's the NBA's man in Hong Kong and Silicon Valley as well.
He's everywhere. Plus, speaking of the NBA, LeBron James is Lyft's latest partner. We'll find out exactly what they're planning. That's coming up next.
This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Carrol Massar.
And I'm Jason Kelly. Still ahead, LeBron James. He is Lyft's latest partner. My conversation with Lyft co-founder and president John Zimmer on their plan to give away free bike share memberships to thousands across the U.S.
And speaking of the NBA's man in Beijing and Brooklyn. A look at the Nets owner and Alibaba co-founder that stepped into the league's controversy over Hong Kong.
It's all sports talk ahead of the Super Bowl, plus our exclusive preview of Porsche's first ad in the big game in more than 2 decades. We hear from North America's CEO Klaus Zellmer on Why Now?
Exactly. First up, though, here's editor Joel Weber with more on this week's cover story, Tesla by haters.
This is a story by Dana Hull about a really vocal minority of Tesla haters, Elon Musk haters, who on Twitter go by Tesla Q. And these are short sellers who are really hurting right now because as this stock has soared, they've felt the brunt of that.
Dana gets to this one individual in particular who's really had a heated social media relationship with Elon Musk.
Yeah, it's an incredible story about sort of the battle between this one guy who really didn't like the company's fundamentals and his interactions with Tesla as a company, and how he really took things to a different place, and so did Tesla in response.
Right. I mean, and it's just a reminder of how binary this is. We talk about it, I feel like, just about every day on our show, and we have the Bulls and we have the Bears, and never the twain shall meet.
So what Dana's story really does well is, like, there is this wider community of haters, and they almost like hive mind with each other about the company, and it's sort of the case study of like one guy who actually, you know, got into the ire of Elon and Tesla, and that's what remarkable timing for this as the company goes through the roof in terms of valuation.
A story of our time for sure. Another story of our time, obviously, is China and sports. A phenomenal profile by Ira Boudway of Joe Tsai, the owner of the Brooklyn Nets, vice chairman, co-founder of Alibaba. Talk about a man in the center of it all.
So what's interesting about this is that I don't think many people knew who this guy was until the NBA and China fiasco happened a couple months ago. And that was immediately when we were like, wait, that guy who just acquired the Nets, the Brooklyn Nets now, is the co-founder of Alibaba. His story is even more remarkable than that. He's Taiwanese born, Ivy League educated, lives in Hong Kong, speaks Mandarin, you know, billionaire. And yet, in the middle of this whole dilemma between how the NBA and China are going to interact, he put out a really thoughtful note, and it made us go, we want to talk to that guy, because he's really in the thick of everything that's transpiring between worlds.
And talk to that guy in the thick of it, as Joel put it, is just what BusinessWeek reporter Ira Boudway did.
He covers sports and all things around the business of sports. Here's that conversation.
It starts with, as people probably remember, the Daryl Morey tweet, the general manager of the Houston Rockets, tweeting solidarity with the protesters in Hong Kong, deleting it, but the whole thing gets going. And Joe told me he was in his apartment in Hong Kong, and he gets a call from the NBA, and they say, you know, this is an issue. There's already a lot of reaction on social media in the mainland China. Like, we're monitoring it, but this could be a thing.
So what was he thinking at the time in terms of how
He's basically
to deal
like,
with it?
I have to say something. I'm Chinese, born in Taiwan, do business, live in Hong Kong amid the protests, you know, own an NBA team, newest NBA owner, big market, do business in China. You know, and he's flying to Shanghai in a couple days because the Nets are playing the Lakers there. So he basically felt like he had to come out and say something.
And so he says something, and as with just about everything in this case, not everyone's happy with it. But what was ultimately the reaction, and what was the effect on him and the team?
So he comes out with this letter that he posted on Facebook that says basically, everyone needs to understand how Chinese people are going to feel about this. And he basically sort of spoke for all of them, or it said he was speaking for all of them, and said, you know, this is really a third rail issue there. We're talking about territorial integrity, and he couched the Hong Kong protests as a separatist movement. And that was the sort of controversial thing. That's the framing the Chinese government uses, not always the framing the protesters use. But he wanted to say, look, this is why this is so sensitive and delicate, and you got to be careful. And he says, basically, he got a lot of people saying, thanks, I didn't know this context. There were a lot of people who were saying, look, you're just parroting the Chinese party state line here. And he, you know, he stuck by it when I talked to him. He said, look, I really think it is a separatist movement if you look carefully.
This is a guy who came to this country, went to Yale. It's an unbelievable story.
It's a really remarkable story. Talking to a lot of people, he knows a lot of people, very powerful people in the world, and they say there's really nobody like him in terms of that position that he occupies. So yeah, he, born in Taiwan, comes to the U.S. at age 13, goes to a prep school in New Jersey, very, elite institution, and there he starts really quickly assimilating, learns English, loves to play sports, plays lacrosse, plays football, goes to Yale, gets on the lacrosse team there, makes a ton of friends that way, goes to law school at Yale, where his father had gone, was the first Taiwanese graduate from Yale Law, and then works his way along. He's at a shop called Investor AB, looking for private equity deals in Asia, based out of Hong Kong. somebody says, hey, you should look up this guy Jack Ma. This is 1999, right after they basically started Alibaba. He goes to meet him and says, I want to throw in my lot with this guy.
Yeah.
And the rest, is history. But he became the sort of the bridge to the US and the West for Alibaba.
And staying with the NBA, LeBron James is teaming up with ride-hailer Lyft.
Here's my conversation with Lyft co-founder and president, John Zimmer.
We just launched a bike access initiative with LeBron James giving bike memberships on City Bike, which is a Lyft-operated and owned system, to thousands of kids across New York, 16 to 18-year-olds, making sure that they can get where they want to go, whether that's school, a job in the summer, or really wherever they want to go. And it's all part of a broader effort called Lyft Up, which is our initiative to make transportation more accessible to everyone.
And so how does this partnership come about? How did it come about with LeBron specifically?
So LeBron's manager, Maverick Carter, and I have known each other from probably the beginning of Lyft, and he was one of the first people that really believed in me and what we were doing. So we've been talking for many years, and we wanted to work together, and we wanted to be truly authentic to who he was, who Uninterrupted his company is, and who LeBron is. And he told me the story about how important the bike had been for him and LeBron when they were growing up to get them to practice. And so the idea was, now that we run the largest bike share program in North America, let's make that accessible to those that don't have access to transportation.
So what are you learning when it comes to bikes in terms of the complication, especially as it relates to the rest of your platforms?
Each mode you have to invest in and go really, really deep. So with bikes and scooters, you have to get up to a certain scale. You have to get really good at making sure there's bikes where people need them, that they're charged if they're electric bikes, and when you're dealing with hardware and making sure it's available at all corners of a city, obviously that's different, but there's a lot of relation to rideshare, because we have to make sure our drivers are well positioned throughout a city for when the demand comes. So mapping demand and the supply, whether that's a rideshare vehicle or a bike, there are actually quite a bit of similarities.
Coming up, credit card issuers have found a way to make more money from borrowers, but is this the new debt trap?
This is a scary story. Plus, Porsche's Taycan, which launched the car maker into the era of electric power, is now capturing the attention of some new audiences.
This is Bloomberg BusinessWeek. Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. Join Bloomberg BusinessWeek every day on the radio, starting at 2 p.m. Wall Street time. You can also catch up on our daily show by listening to our podcast.
You can also find us online at businessweek.com and through our mobile app. And now you can watch us on YouTube. Just visit youtube.com and search Bloomberg Global News.
Credit card issuers, well, they have found a way to make more money from borrowers. They're raising the spending limits for many of them.
Even when people haven't asked for those raises. Is this the new debt trap? Here's this week's Business Week explainer. Consumer advocates accuse banks of setting a trap. It's called the Proactive Credit Line Increase, better known as PCLI. Some customers on the verge of maxing out their cards are getting their spending limits raised without their permission. Many of the cardholders getting the increases are near-prime customers. That means they have limited or sketchy histories of paying bills. U.S. issuers boosted credit lines for about 4% of cards in each quarter of 2018. That's double the rate in the years after the financial crisis. The strategy, it's paying off for banks. They generated a record $179 billion from credit card interest and fees in 2019. Boosting credit limits is part of the strategy for additional growth at card issuers including JP Morgan, Capital One, and Citigroup. But analysts call it risky business. They say that in a downturn, the added debt could hurt both cardholders and the banks that issue them. Well, staying in the finance section, for investors eager to assess a company's environmental and social performance, we're hearing a lot about ESG these days. There's a real obstacle. The data's a mess, or it doesn't even exist at all.
Enter the quants. Here's sustainable finance and good business editor Emily Chasen.
The data is not very clear. It's kind of a mess in ESG. It's not regulated.
And this I just have to say, because I feel like Jason and I have had a lot of conversations about ESG, and I'm sure you have too, that it's not like you can compare one fund to another. Everybody everybody's using different metrics to kind of screen for those ESG factors.
Yeah, and I mean, every company that produces ESG data is often using different metrics as well.
And it's their data, right?
Yeah, or sometimes they don't produce it at all. So this story is about quants and how quants are betting, we're good with bad data, we're good with problems in data, and we can use this to our advantage and build sort of models that incorporate all the data and let us trade better.
So tell us about some of the quants, because you're talking about some well-known folks here.
Yeah, so we talked to a few firms. One of them is Arabesque Asset Management. It is a firm that's based in London and Frankfurt, and they are building a huge artificial intelligence model that works to see how to incorporate ESG factors so that they think they can tilt their portfolio and get a better return. But it is a huge model. They run it across 6,000 computers.
Right.
So
11 different data centers. That you concluded that in your story. That kind of blew my mind. It just gave us an idea in terms of the scale of information and data that they have to play with.
This is a lot of unstructured data. It's data, from governments. It's data from NGOs. It's data from all sorts of groups that are producing this ESG data. It's not just the companies. And trying to parse it all together and make estimates about it is really a gargantuan task.
They're finding, as a result of some of the ESG work they're doing, right, I think that they can use it more generally, right, in just investment applications at their firm.
Yeah, a lot of the quants that are betting on this, they're not just betting on finding good companies or bad companies. What they're betting on is that ESG information will produce better information for trades, and that incorporating more information is better than not.
Well, and talk about that element of this, because this is something you've done a lot of work, you and the team have done a lot of work on, Emily, which is this notion of not treating ESG as something other, as something separate, but actually integrating it into a broader portfolio approach. How far along are we in that, where this becomes more normal course of business?
Yeah, well, one of the quants we interviewed in the story is Kelly Asset Management, one of the really big quant firms out there. And they've just decided they're going to take ESG and put it into their portfolio metrics. So the same way they say, if you're a corrupt country, we're going to give you a discount for corruption if your company's based there, they'll do that for carbon pricing. And what they found is really fascinating, that carbon pricing in places where there is an actual carbon tax is affecting stock prices in those regions. So in places where there isn't a carbon tax, big emitters they saw were also getting affected. So what they did was they said, let's put in an implicit carbon tax into our portfolio, and we're going to go extrapolate based on all 40,000 companies based on their emissions. And even if they don't report emissions, we're going to estimate what their emissions are based on their revenue, based on their size, just to see if their industry, just to see if we can figure it out and sort of use this information instead of pretending it doesn't exist.
Right. I have to say, I love this quote too in your story. I think this was from the CEO of QMA, and they're a unit of Prudential Financial, right? We all know about that firm. Quants are used to filling in the gaps. I mean, this is what's kind of crucial. I think this is what's been needed in the ESG space, right? That there are a lot of gaps in really, defining the metrics that measure ESG, each of these different ones, categories, do it really well.
Yeah, and this is also really about the hunt for alpha, right? There's so many ESG metrics. There's so many different ways you can see a company, and which metrics are actually going to influence the market and influence returns. And I think the quants are really trying to find that out.
Well, Carol, with climate change becoming really one of the defining issues of our time, last week marked the launch of Bloomberg Green. It uses in-depth data and reporting to illustrate the scale of the challenge. You can find it on the terminal online and, of course, right here on Bloomberg TV and radio.
Gotta say, the dashboard alone is worth checking out. All right, coming up next, Porsche returns to the Super Bowl. We have the exclusive preview of the German sports car maker's high-speed TV ad.
This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Carrol Massar.
And I'm Jason Kelly. You can also listen to us on the radio on Sirius XM channel 119, also AM 1130 in New York, 1061 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area, in London, on DAB Digital, on the Bloomberg Business app, and you can watch us on YouTube. Just visit youtube.com, search Bloomberg Global News. Well, the Super Bowl, yep, it's just 1 week away, and while some will focus on the big game, companies focus on the audience to catch our attention during one of the most watched TV events of the year.
Well, great for us. Porsche gave Bloomberg an exclusive first look at its commercial. It's called The Heist. It features a chase between nearly a dozen iconic Porsche cars, including the new fully electric Taycan. It's playing right there behind us.
Pretty cool. First time it's being seen right here on Bloomberg BusinessWeek. It's also their first spot in over 2 decades. We spoke with Porsche North America CEO Klaus Zellmer while he was in Atlanta on Why Now, this ad.
Porsche is looking at Super Bowl as an opportunity to share the Porsche story and, of course, the new arrival of a family member right at the big game. And we're really excited about it. Last time we were there was 1997, so quite some time ago. So we chose to choose those moments carefully.
Well, and tell us about kind of why now, why this car? I mean, this is a big game, obviously. Is this about going after kind of a younger audience for Porsche?
Generally speaking, it's going after new audiences and making new friends out there. And the Taycan, that's the entry now for us into the battery electric vehicle era, which is momentous for Porsche. And that's why we want to share the story about Porsche. We've been developing and producing, selling sports cars for over 70 years now. And we want to show a couple of cars through those decades in that spot, but we also want to show the Taycan, the battery electric vehicle.
All right, so Klaus, notably, and you mentioned this, there's a little bit of a history lesson embedded in this ad, and you do show some older cars as well. Tell us about what you're going for, and I do wonder, in a field where there are some notable upstarts here, maybe you're trying to show a little bit of a legacy and history and experience.
Well, we think every Porsche ever built in over 70 years has got a soul. And now we talk about soul electrified. So you want to see some of those cars that this brand stands on. I give you one example. There's a racing car in that spot, a 917K that was built purposely for winning the 24 Hours of Le Mans 1970. In 1971, it was the main feature of Steve McQueen's Le Mans movie, and that car is part of a heist of cars that are trying to catch up with a Taycan going through a interesting scenery in Germany.
So talk to us a little bit about the Taycan. We were lucky. You brought a car here to Bloomberg. Jason and I got to sit in it with our own Hannah Elliott, as you well know, our car guru here at Bloomberg. Tell us how car sales are going. What kind of numbers are you seeing across the world? Demographically, where is it selling?
Well, generally speaking, we have just started delivering, and the United States was actually the first country in the world getting those cars on the ground, delivered to customers. So we've sold 130 last year in 2019, so that's not big numbers, but we're aiming, of course, to bring this car to the States in larger numbers. And the big swing that we see coming up is also connected to seasonality. So spring this year, you're going to see quite a few Taycans in Porsche dealerships, and hopefully also all the prospects, hand raisers, depositors, and people who've already ordered the car then being enthusiastic about that new arrival.
Tell us about the customer for the Taycan specifically. Is this, how much, I should say, does this sort of widen the aperture, as it were, to a different audience, a younger audience, a different geography? Who's going to buy this car that might not have bought a Porsche before?
I mean, is Jason your customer? Is that who you're going after? Who is it?
Well, what we can derive data from at the moment is our database with all our depositors and people who've actually ordered the car. Looking at that, that's a couple of thousand of people. So that's interesting that 50% come within the brand. So they're driving a Porsche right now, and they want to either add the Taycan to their garage, or they want to replace one of our cars. But 50% come from the outside of our current clientele. And the outside, the main competitor in the outside world that is currently then engaging with the Taycan is from Tesla. So we respect that brand. We respect them preparing the market for battery electric vehicle, but we also respect their customers now looking into driving a Porsche when it comes to battery electric.
So what I'm hearing, Klaus, is that you're saying some of them are new to the brand, new to the Porsche brand that you're bringing in.
That's right, yeah. 50% are new to the brand. So they have never owned a Porsche before, and a conquest rate of 50% and more always is a very good indication for having the right strategy in our business model, at least.
So do I hear that a 911 will ultimately, I know, go electric? I think it's the last line that you're going to do it. It will happen eventually?
Well, everything is going to go electric eventually,
That's true. You guys have made that commitment, yeah.
That's the name of the game. And yes, the 911 will most probably be the very last one in the line for that transition. And it might happen, in a decade from now. We don't know. We just know that from our current plans, 50% of our cars sold in 2025 will actually have a plug. So will either be battery electric vehicle or will be a plug-in hybrid.
All right, really cool ad. So cool to have it here first on Bloomberg BusinessWeek. And you can hear more from Klaus Zellmer. That's on our Extra podcast.
And for more on the making of the commercial in Germany and the high-speed chase, our all things car expert Hannah Elliott. She spoke with Porsche's stunt driver from Berlin.
We started clearly at the museum with the old cars, with the exit of all the cars, and then we moved over to in front of the museum, in front of the castle. Then we switched to Heidelberg, to another historical location, and we jumped up to a dam down in the Black Forest.
Going into this, there are certain logistical challenges of driving these very old vintage race cars. Can you kind of describe what goes into making them drift, pushing them so hard?
It's not about pushing so hard, it's more about going as slow as possible, because these cars are, that are unique cars in a shape like they passed the finishing line 50 years ago in Le Mans, and you cannot ride them like 50 years ago on a 24 hours endurance race. You cannot sit in a car like that and just hit the throttle and go hot. We combined that with all the other cars. There was another GT1, original one, 918, until up to the very top of the newest cars, the Taycan, and it's really hard to bring them all in one level. It's like you're driving a car on a rally, and with the same setup you drive on a 24 hours race on tarmac. It's barely impossible, and that was the big challenge on them, to bring the cars together, to bring the drivers all together, the communication from the director, from the Porsche Museum, from all influence from outside, to bring it in one point and squeeze out with the lowest level of danger, the maximum visual effect.
Bloomberg BusinessWeek is available on newsstands now.
And also online at businessweek.com and on our mobile app. Your must-read?
My must-read, it's the cover. I had been really anticipating like a big, juicy Tesla story, a cover story from Dana Hull, and man, did she deliver. So timely, and on a week where the company hits $100 billion in market cap.
Yeah, it's interesting to her take, and I have to say her insight is like no other. So it is definitely a must-read. My must-read is actually a must-watch.
I see what you did there.
Gotta say, that ad from Porsche that they're going to be running in the Super Bowl. First time you're getting to see it right here on Bloomberg BusinessWeek. It's called The Heist, but it really is a new era for Porsche as they're moving aggressively into electric vehicles. So I love that.
It's also such an interesting inflection point for the company, and we've spent a lot of time with Klaus Zellmer. Understanding his strategy and how they're going to electric is really cool.
All right, and be sure to check out our Daily Business Week podcast. You can also watch us on YouTube. Just visit youtube.com, search Bloomberg Global News.
More Bloomberg Television starts right now.